Nike reports earnings after the close today. Analysts looking for profit of 96 cents a share on revenue of $4.7 billion. Joining us with a little bit more on what's expected is Bloomberg's Vera Gibbons. Vera.
Good morning, Deirdre.
Hi. So we've got a weak global economy, right? Consumers still not spending.
Right.
Seems like it shouldn't be good for Nike, but somehow they're beating some macro
Yeah,
trends.
they're doing all right. You know, athletic wear overall is doing much better than some of these other categories, so that's a positive. Not to say that Nike hasn't been immune to the challenges of the macroeconomic picture. They've seen their profits slip in recent quarters. They are up against softer sales, but they have taken measures to actually improve their bottom line. As you recall, they recently cut their workforce by about 5%. This is a move, Deirdre, that will save them a couple $100 million over the course of the next several quarters. They've also got tight inventory controls. And unlike the competitors, they've actually managed to capture market share here in the U.S.
So, Vera, I mean, how have they managed to capture this market share in what's a pretty competitive marketplace?
Right. Well, they've got 25,000 retail accounts in the U.S. alone. So they've got a wider market penetration. The product's available to a broader customer base. They've got the strong distribution network. This is a really strong brand. They've got the awareness campaigns. They've got the celebrity endorsements, all these people promoting them. So they have really been climbing up the brand ladder, if you will. Swoosh, of course, is one of the most recognizable corporate logos in the world. Again, they have the strategic partnerships, Apple, Google. So they've actually been able to attain and attract a very strong customer base.
But nevertheless, right, Vera, I mean, Nike has been criticized for being too reliant on certain kinds of customers.
Yeah, that's a good point, Deirdre. I mean, they've been criticized for being too reliant on customers like Foot Locker, which in some years has actually accounted for about 10% of their revenue. So that's an issue that's being watched. Raw material costs also going up. That's affecting all of these manufacturers. And the counterfeit market has been growing. All of these fake products coming out of China, coming out of Southeast Asia, that's something that could tarnish the brand's image. Customers get confused, and that could ultimately chip into their market share, Deirdre.
Vera, thanks very much. Bloomberg's Vera Gibbons.